Most traders don't fail because they don't know how to trade. They fail because they chose the wrong trading style. They were told day trading is the fastest way to make money, so they sat in front of the charts every day, took trade after trade, and slowly watched their confidence disappear. Today, I want to talk honestly about swing trading versus day trading, and why, for most people, swing trading works better than day trading. Not because it's easier, but because it's more realistic. And at the end of this video, I want you to tell me in the comments section which one actually works best for you. When most traders start trading, they're introduced to a distinct style. Sit in front of your computer for hours, watch every tick of the market, trade futures or leverage stocks, make a quick profit and get out. This is the image most people have. But let's be honest, not everyone is built for that kind of intensity. Day trading demands a lot of you. It needs constant focus, it needs quick reactions, and it needs an ability to handle high-stress situations repeatedly throughout the day. For some traders, this is exactly what they want. They love the adrenaline, they thrive under pressure, and they find satisfaction in the immediate feedback of quickly closing a trade. But for most people, this intense environment becomes a way too much very quickly. Swing trading offers a different approach. It's not about being fast, it's about being deliberate. Swing traders are not looking for constant entries. They're looking for positioning. They wait for price to reach an area that makes sense. They enter once. They hold the trade, sometimes for a day, sometimes for several days, sometimes even longer. Because they are not constantly entering and exiting the market, their total number of trades is much lower. Fewer trades mean fewer spreads paid, fewer commissions, less slippage. Over weeks and months, this difference becomes very clear. Two traders can have the same win rate, the same risk management, the same strategy quality, but the one who trades less keeps more of their profits. Trading costs are invisible when you're focused on being active, but they are very visible when you're focused on being consistent. This is why many traders feel like they are doing everything right, yet their account is not growing the way it should. They're not necessarily bad traders, they're just paying too much to the market. Swing trading naturally protects you from this, not because it's perfect, but because it encourages patience. And in trading, patience doesn't just protect your mindset, it protects your capital. This is usually the part of the conversation where things get uncomfortable. Because once we move away from opinions and start looking at data, the picture becomes very clear. And the truth is, the market doesn't care about what sounds impressive. It rewards what actually works over time. Several long-term studies have tried to answer one simple question: who really makes money in the market over time? And when researchers looked closely, a consistent pattern showed up again and again. Traders who traded less frequently and held positions longer tended to perform better. One analysis linked to UC Berkeley observed trader behavior and performance and found that frequent trading was strongly associated with underperformance. In simple terms, the more often traders jumped in and out of the market, the worse their results became. Now let's talk about one of the most referenced studies in trading research, the Taiwan Stock Exchange study. This study followed thousands of traders over multiple years, not for weeks, not for months, years. And the results were very revealing. The traders who traded the most, the ones who were extremely active, mostly day traders, were the least profitable. Meanwhile, traders who held positions longer, who traded less frequently, had significantly better long-term outcomes. And then there's another statistic that's very hard to ignore. A School of Economics research paper found that 97% of day traders who continued trading for more than 300 days lost money. That means even the ones who didn't quit early, the ones who stayed, still struggled. Now pause here for a second. This doesn't mean day traders are not intelligent. It doesn't mean they didn't try hard enough. It means day trading places traders in an environment where mistakes compound very quickly. Frequent decisions, constant pressure, emotional reactions, high costs, all of that adds up. Swing trading, on the other hand, aligns better with how markets actually move. Markets don't make their biggest moves in minutes. They make them over days and weeks. Swing traders position themselves inside those moves. They're not trying to predict every fluctuation. They're trying to capture direction. This longer holding period naturally filters out noise, and when you remove noise, decision-making improves, emotional reactions reduce, probabilities have time to work. That's why the data consistently shows better outcomes for traders who trade less and hold longer. It's not about speed, it's about structure. Most people enter trading believing activity equals productivity, but the data shows that restraint often outperforms aggression. And that's one of the hardest lessons traders have to accept. This is one of the most misunderstood parts of trading. A lot of traders believe that money is made at the moment you enter a trade. But in reality, money is made by how long you stay in a good trade. Day trading trains you to think in short bursts. You enter, you watch every candle, price pulls back slightly, and immediately your mind starts racing. Should I close now? What if it reverses? Let me just secure something. So you close the trade. Ultimately, yes, you made a profit. But emotionally, something happens. You start seeing price continue in the direction you predicted without you. That experience repeats itself again and again. Over time, day traders get very good at being right about direction, but leaving money on the table. Swing trading changes that relationship completely. As a swing trader, you are not trying to capture noise. You are positioning yourself inside structure. You accept that price will fluctuate. You expect pullbacks. You understand that movement is not linear. Because of this, you don't panic at the first sign of retracement. You give the trade room to breathe. And that breathing room is what allows winners to grow. Here's the quiet advantage most people overlook. A trader doesn't need to win more often to be profitable. They need their average winning trade to be meaningfully larger than their average loss. Swing trading naturally supports this. Because trades are held longer, trends have time to develop. Momentum has space to expand. Price can travel farther. Day traders, on the other hand, are often forced to operate under pressure. They exit not because their analysis is wrong, but because time, fear, or fatigue pushes them out. Another important point is this: the market rewards commitment to an idea, not constant adjustment. Swing traders commit. They plan the trade before entering. They know where they're wrong. They know where they want to exit. Once they're in, their job is mostly patience. Day traders rarely experience this calm. They are constantly reassessing, constantly reacting, constantly making micro decisions, and each decision carries emotional weight. Over time, this leads to inconsistency. Swing trading removes many of those unnecessary decisions. Fewer entries, fewer exits, fewer chances to self-sabotage yourself. And when self-sabotage is reduced, performance improves. This is why many traders who switch from day trading to swing trading say the same thing. I didn't change my strategy. I just stopped interfering with my trades. Holding periods matter. They allow probability to work. They allow winners to compensate for losers. They allow your edge to actually show itself. That's why swing trading doesn't just feel different, it performs differently.
Reason 4. Time efficiency. Trading has to fit into your life. This is something many traders only realize after they're already exhausted. At the beginning, time doesn't feel like a problem. You're motivated, you're excited, you're willing to sit in front of charts for hours. But over time, reality shows up. Life doesn't pause because you trade. Responsibilities don't disappear. Energy isn't unlimited. Day trading demands your presence. You have to be there at specific times. You have to watch price move bite by bite. You have to react quickly. If you step away, you miss a setup. If you lose focus, you make mistakes. That creates pressure, and pressure changes behavior. Many day traders don't take bad trades because they don't know better. They take bad trades because they've been staring at the screen for too long. Fatigue sets in. Focus drops. Emotions rise. Swing trading works differently. It respects the fact that you are human. As a swing trader, you're not required to watch every candle. You don't need to sit through entire sessions. You analyze when it makes sense. You plan your trade. You set alerts. And then you step away. That space matters. It gives your mind room to rest. It removes the feeling of urgency. It reduces the temptation to interfere. Swing trading also allows you to separate analysis time from execution time. You're not forced to make decisions in the heat of the moment. You can think clearly. You can review your plan. And when decisions are made calmly, they tend to be better decisions. Another important point is sustainability. Trading is not a one-month activity. It's not even a one-year activity. If you want to succeed, you need a style you can maintain for years. Day trading can feel productive, but it can also be draining. Swing trading is slower, but it's more sustainable. And sustainability matters, because consistency doesn't come from intensity, it comes from balance. When trading fits into your life instead of competing with it, you're more likely to follow your plan, respect your rules, and stay emotionally stable. Time efficiency isn't about trading less seriously. It's about trading in a way that allows you to stay present, focused, and clear. And for most people, swing trading simply makes that possible. Reason 5. Stress, emotions, and the psychological load. This is the part of trading nobody prepares you for. Most people come into trading thinking the challenge is technical, learning entries, understanding structure, finding the right strategy. But very quickly, you realize something else. Trading is psychological first. Day trading places you in a state of constant mental stimulation. You're watching price tick by tick. You're making decision after decision. You're reacting in real time. Even when you think you're calm, your nervous system is working. Your heart rate increases. Your attention is locked. Your mind is constantly evaluating risk. That level of stimulation doesn't feel dangerous at first. It actually feels engaging. But over time, it becomes exhausting. And when you're exhausted, your decision-making changes. You become more reactive. You take trades you wouldn't normally take. You exit trades earlier than planned. Not because your analysis is wrong, but because your emotions are louder than your logic. Day traders often experience emotional swings that mirror price movement. A small loss feels personal. A small win feels relieving, not satisfying. And a sequence of trades can leave you mentally drained before the day even ends. Swing trading reduces this pressure significantly. Not because emotions disappear, but because they're not constantly triggered. As a swing trader, you're not required to respond to every movement. You're focused on higher time frames. You're working with structure, not noise. That distance creates emotional space. You're not attached to every candle. You're not constantly second-guessing yourself. You allow the trade to play out. That naturally lowers stress, and lower stress leads to clearer thinking, better risk management, fewer impulsive decisions. Another important psychological difference is expectation. Day trading often creates unrealistic expectations about speed. You expect results now. You expect movement immediately. And when it doesn't happen, frustration builds. Swing trading resets that expectation. You understand that good trades take time. You accept waiting as part of the process. That mindset shift alone removes a lot of internal pressure. Over time, many traders who move from day trading to swing trading say something similar. I finally stopped fighting myself. They didn't suddenly become smarter. They didn't discover a secret strategy. They simply chose a style that worked with their psychology, not against it. And that's the key. The market is already difficult. Your trading style shouldn't make it harder. When stress is reduced, discipline improves. When discipline improves, consistency follows. And consistency, not intensity, is what builds long-term success in trading.